Hi, Kevin Blanch. Today I'm going to talk and I'm going to prove to you guys, show to you guys how 70–80% of all wealth in America has been destroyed over the last decade. Crushed. The reasons why? I've got my theory. Well, they're not even theories. I think nobody can even debate them and argue. The dollar imploded when we went into Iraq. Now, I hear it all the time. I get emails, the Fox doomfayers, oh, buy gold, silver, the dollar's falling apart. Little late, little late. And for the first time in my financial career, my 30-year financial, I really think it's maybe time to start thinking about buying the dollar. Now, as we have this crazy, psychotic, mentally ill, play games with the American psychic on the debt ceiling argument, there'll be fear. Let's think about it. When gold made its gigantic move, and it hasn't done it just for the last 2 years, gold's made a gigantic move over the last 10 years, as the dollar's meandering around where it was for the last 3 years. I remember being in Manhattan in the 90s, going to a meeting with the president of the EU, spoke. We hope someday to have the euro trading equivalent to the dollar. Wow, if somebody would have told him right then, oh, hell with the freaking equivalent of the dollar. How about $1.60? How about the yen falls down to 65 cents? How about the Canadian dollar trading equal? You know, how about $15 trillion war when we had a surplus? How about the Dow laying there at the same place it is? How about the NASDAQ goes from 5,000 down to 2, meanders around there? The S&P 500 lower, and if you weighted in my matrix, you've lost 80% on the Dow. I mean, you've lost 80% all the way. I don't care if you're a working class guy. I don't care if you're a business person. I don't care if you're just a living, breathing human being. This affects every single one of us, all 308 million of us. Big time, big time. And I'm going to show you how. Look, in the 90s, I used to crunch. In the 80s, I used to take all the European currencies and I used to crunch them all. It was hard work, and I'd build me a basket. Well, when the euro come out, they did it for me. I'm like, oh God, what a relief. I mean, it helped guys like us so much as hedge fund guys, wealth protection guys. Look, okay, say you made $1,000. Let's say you made that a week. Let's say, okay, so let's weigh it against the dollar now. Even if you basket it, I like to use the euro because the euro, believe it or not, if you take my basket, which I built, I call it my Kevin Blanch Wealth Index, which I use gold, I use oil, I use a basket of whole currencies. But if I just use the euro, it gets pretty close to my matrix. I mean, actually my matrix, if I basket everything, is even worse. We'll use the euro just for conservative sake play. You know, in reality, we all know what was oil. Like I said, hell, a gallon of gasoline cost less than a gallon of water in the night. How rich were we? Rich. The euro's sitting at 70 cents. Okay, so you're making it. So if you just use the euro, your paycheck in today's dollars is what? Less than $500. The euro has went from 0.70. It went as high as this. Now look, it means everything. And people say, well, you just can't basket that against the currency. Oh, really? You can't? Okay, then let's basket it. I get this argument all the time. I have this argument with these idiots all the time. Especially during the Bush administration, I had this basket with these Ayn Rand. And if you think Greenspan was a true Ayn Rander, he was a fake Ayn Rander. You know, you do know he did his doctoral thesis and he calls himself a free market. I mean, what do you think QE2 is? They've got the interest rate so low at 0. They've had to even get creative. QE2, quantitative easing 2, means they're going into our own bond market and buying our bonds. This would have been reason to go to jail 10 years ago, 20 years ago. Talk about unheard of. People, you know who Jimmy Rogers is, the guy with the bow tie. He's a commodity guru, and I watch him like a hawk. He called this early. When they started this nonsense of Greenspan lowering the interest rate when it should have been, he called it. He got so pissed he moved to Singapore. You know, and I've been listening to him as of late, and he's still saying to hold your precious metals, but I think it's time for the first time, I really do, for the first time in my career, especially over the last decade, to maybe start thinking about buying the dollar. Now, I know we're going to have this debt ceiling, freaking grandstanding political theater argument, but let that argument reign. So we're going to have time to kind of wade in. But I got a hunch. This thing has gone so crazy. I hear people all the time, I think the dollar's going to blow. Little late. I'm going to buy a silver. Like I said the other day, the bus driver, because I like to take the bus. I rode on the bus and he was telling me how his wife freaking told, and I know his wife, completely insane, psychotic, telling me I need to buy a gun and buy silver. And I'm like, you're a little late for that, dude, I'm telling you. You know, and I thought to myself when I got there, it was just like Joseph Kennedy said when he got in the cab, and the cab driver was giving him a list of stocks, and he went and shorted the entire market the next day. And that was about a week ago. Sure shit, here's silver. You know, it's funny how things like that work. Bubbles do work that way, and bubbles in commodities have been around forever. And all you people that say, oh God, these guys that short stocks, it's like these you writers out there. Oh, you just discovered that people can buy derivatives on it? It's like that's something new. Oh, I just discovered freaking cold fusion. Wow, you fucking morons. Oh, sorry, I was supposed to watch my language. Look, that's the way markets work. They've always been. Now, granted, we've had not enough regulation. There's no doubt about that. Wall Street's gotten away with bloody murder. But as far as derivatives and those guys are shorting the market. Shorting the market's been around as long as America's been around. Please, that's what makes these markets work. And they say, oh, your derivatives. Without derivatives, we have no mining industry. We have no agricultural industry. We have no oil industry. None. Zero. I mean, it would be wiped out. These people have to hedge because that's the way markets work. They have extreme volatilities in them. Now look, as far as the dollar goes, like I said, we go from 70 cents to $1.60 on the euro. What's the yen now? Take a look what the yen's done. Well, this hasn't happened the last 2 or 3 years. We've kind of meandered around. Why? You know, I have my theories. Well, I don't even know the theories. I think it's fact. When we went into Iraq, not only did we start throwing a lot of money there, and there goes all the surplus, we start deficit spending via military, and NAFTA. We eroded our job base, gonzoed. You know, so nobody's paying job. But there's a lot of psychology to this. And hear me out. The reason a lot of the psychology is to this, to the dollar, in the 90s, you know what percentage of wealth that was invested into our equity markets was foreign money? Huge. Huge. I believe it was well over 30%. People were so outraged about the whole thing around the world, they pulled out. They moved to China, their money. And as the money went, industry went. And we allowed, and we kept doing more and more laws to get rid of tariffs. I like to say, as Alice Hamilton would roll over. This whole pure freaking marketplace argument is pure fairy tale fantasy land. We have never been there, ever, ever. We are guided capitalism, always been guided capitalism. But if you're an investor, watch that dollar. As the dollar gets stronger and stronger and stronger, which it hasn't done for a long, long time, we went from 0.70 to $1.60. We reeled back down to $1.20. What are we right now? $1.43 against the euro. We're at $1.43. Okay, at $1.43, so we've come down a little bit. The day you see the market rising and the dollar coming down, getting strength, that's when you know America's getting better. Not until. Not until. And I know what the Fed's philosophy is. It's called inflating your way out. But they've used up all their bullets. You inflate your way out by lowering interest rates, lowering interest rates, lowering interest rates. So when the dollar gets weaker and the Dow or the NASDAQ are any good, including the equity in your house goes up, it's not doing you any good. And I get this argument all the time. People say, well, you can't just wait against foreign currency. Okay, well, what do you want to wait against? I tell people, okay, let's go. The classic weight that all great economists have used for centuries is gold. Gold was $225 an ounce in the 90s. It sit there for decades and decades right thereof. What is it today? 1,500. So you want to wait it again? Start doing your math. You want to use the PPI and the CPI, that bullshit government number that they throw at you, which is total bullshit. Okay, what else you want? You want to use silver? Okay. How about oil? There's the classic. That's the one that's replaced gold over the last. What do we have? Well, $15 a barrel? What do we have today? 100? Start doing the math on that. So I'm using a conservative method here. So if you can weigh it against anything. I like to take gold. I like to take oil. I like to take a whole basket of currency. I like to use the yen, the Canadian dollar. I like to use the euro. Now, as far as China, oh yeah, they do manipulate the currency. And you're like, why does that matter? I'll tell you why it matters. Because it's called classical medicine. As our currency becomes weaker, our goods become more attractive because their currency is stronger, correct? So they can buy up our goods. Problem is we don't make anything. There's the fallacy right there. And the fallacy that the Chinese are still buying up all our treasuries, and our treasuries are worthless. You can buy them. Yeah, they're fine. In the deflationary time, you could sit there, gaining zero. And if we teach in these classrooms for years, that is the risk-free rate of return. And I've argued for years, it is not risk-free. This government could default. Now, all you people think that we're not going to get the debt ceiling and we're going to default, you're crazy. that is political theater. So don't buy into it as an investor. Don't get hyped up. And for the first time, fear plays a big part. Absolutely. I'll tell you what, for the first time I can ever remember in my career, the first time you've seen the dollar roll in from $1.60 to $1.20, it was getting strength there a year and a half, 2 years ago. Gold continued to rise. I've never seen it in my life. Never. As the dollar gets stronger, commodity pricing goes down. That is Finance 101, and it has always been true. That is the fear component. It is not the consumption component. Who consumes gold? There is no market to consume gold. It is a fear component. Well, it's going to end because two things. One, the fear ends at some point. Two, as it gets higher and higher price, the less people can step in and buy it. So I'd be very careful. Watch this dollar, watch this dollar. Like I said, if it gets stronger, if we get weaker, which Jimmy Rogers keeps saying, hold your precious metals, I think it's time to start buying the dollar. I honestly do, and I'm going to do it. And I've been known to be early as a trader. But I'm going to walk in, I'm going to slowly watch this as the debt ceiling debate. But I think we're there. I think we're going to see this dollar start strengthening. And I think commodity prices are going to come back down. We're already starting to see signs of it. I honestly could see gold, under 1,000 by the end of the year. I really could. In fact, if I had to bet. And as a derivative player, as an investor, we have to take chances on this. And everybody says, well, I'll bet you. Well, we don't have to bet each other. We have the markets. We can invest. We can go in and go short. And we have these new things called ETFs. We have double leverage. We have triple leverage. There's where to buy it. But be careful. I tell people, if you've got some profit, if you bought gold at $300 an ounce, why would you sit and let it all sit on the table up there? Take some profits. Just like when silver made that giant. Do you realize what silver kind of move it made this year? Just this year. I mean, in the fall, I was selling some silver at $18 thinking it was overpriced. And we go to 48. It's been psychotic. Well, a bubble. You're going to have this. My guess, silver's going to settle in the 20s somewhere. That's my guess later in the year. But keep your eye on that dollar. And we have been crushed. And it didn't happen over the last 2 or 3 years. So as you guys get fear-mongering, don't fall for it. Do not fall for it. It's a little late in that trade. If you'd have been that mentality 6, 7 years ago, you'd have had some money. Keep your eye on the dollar-euro. If you see that dollar-euro get to $1.20, start to reel back down, we're all going to get richer. Your paycheck's going to go farther. Your investment dollar's going to farther. America's going to get healthy. That's what we need to see. Stay on it. Kevin Blanch.